wow, we have quite the collection online already, and as we will record this session, we'll probably get started promptly. Good afternoon, everyone. Thank you for joining this webinar. My name is David Williams. I'm a Transformation Director at Encompass Corporation, and I have the pleasure of being your host and moderator today. A couple of points around housekeeping. Microphones and cameras for participants will be disabled throughout the session. However, you should be able to see myself and our panelists. If you do have any questions that you wish to ask during the session, feel free to add them to the chat and we'll do our best to address them as we go. But if we don't get to them all, we'll follow up with responses after the session. During the session, we'll also be running a poll question, which should launch in your chat, and live results will be posted online, or sorry, on the session on screen, which we hope will generate some further thought and discussion points. Today, we're going to run for about 60 minutes or to the top of the hour, but as I mentioned a moment ago, it is being recorded. And we will share copies of the recording with any and all that attended and registered. Today's topic is KYC, and specifically the burden of KYC processes on corporate treasurers and their supporting teams in the pursuit of establishing and retaining relationships with their banking partners. We have a wonderful panel to discuss how changes over the years have impacted their day-to-day functions. And we'll kind of talk about how that has had impact into what they're doing day to day and how it impedes their ability to execute on the core responsibilities of their functions as well. We will also then be linking this to some of the findings in our most recent corporate treasury survey results. It's a global survey that we run every year. If you haven't had a chance to read it yet, I do encourage you to take a look after this webinar. If you don't know where to find that, we'll also be sharing a QR link later in the webinar itself. Before we dive in, I'll turn over to our wonderful panelists to introduce themselves, share a bit about who they are, their role, who they work for, and potentially how KYC is impacting them and their ability to execute on core responsibilities. So maybe if we start with Soili, then Natalia or Solia, Johanna.
Yes. Hello, everyone, and good afternoon. My name is Soili Heikkilä, and I work as Global Compliance Officer for Volvo Treasury, which is part of Volvo Group, where we produce and sell trucks, buses, construction equipments, and marine engines, to mention some. And I have been working at Volvo 25 years and with AML and compliance topics the 10 last years. So happy to join this interesting KYC webinar today.
Thank you, Soili. My name is Natalia Lemets. I'm legal counsel of Dellen Group. Dellen Group is the real estate investor and developer, mostly in the Netherlands and the UK, also in Spain. And I've been working for Dellen Property since 2020. And also before Dellen, I was dealing with KYC on the ad hoc basis, but for the past 5 years, I think the KYC burden has increased drastically, and now it turns to be part of my routine work almost every day. So that's why I'm very interested in this webinar to share our concerns and to also to look for the solutions to optimize these KYC processes.
Welcome, everyone. My name is Orsolya. I'm working for Friesen Campina almost 8 years. Friesen Campina is one of the largest multinational dairy company in the world. I'm a part of the corporate treasury team. I started to handle the KYC request 4 years ago, and now I'm responsible globally for the KYC request in our organization. And I'm here and I'm happy to share some of the practical challenges and experiences from the corporate side today.
Yeah, thank you. Hello to everyone. My name is Johanna. I'm working for the global shipping company Hapag-Lloyd. Some of you might have spotted one of our orange containers, which are transported around the globe. Our headquarters is located in Hamburg in Germany. And in my role as manager for asset and corporate finance, I'm responsible for all KYC requests in regards to our financings for vessels, for containers, and for the company itself. We have a business relationship with Encompass since 10 years, almost 10 years. Since then, we are working with Encompass, formerly called CoorpID, and I'm happy to share my experience on KYC-related topics and matters with you.
Wonderful, thank you. So as you can tell between the panel, there is a wealth of experience in this space to pull on for today's session. Some slightly different roles, managing slightly different treasury activities, but spanning a number of years in their respective roles and organizations. We've touched on the fact that we're passionate to come talk about KYC, but I wonder if we could get a little bit more into some of the specifics. So perhaps each of you could share what is your single biggest frustration that brings you here today, passionate to talk about KYC, especially given KYC wasn't part of the role profile when you probably applied for the role back in the days. So
if I may start, David, yeah.
Yeah, please.
So if I look in general on KYC topic, I think that unfortunately we start to forgetting why are we doing this exercise at the end, and not we I mean all the participants of this system, because it's very frustrating when the form is preceding the sense. And sometimes if you have to spend so much time, which adding so little value, because you are like providing the same information to different people, but in different forms. And it's frustrating that you cannot, for example, use the unified KYC questionnaire, for example, and you have to do this, to fill in this questionnaire every time manually with a slightly different questions, like slightly different information. And then you have to reach out to people in your company for some real little details, because the requirements of the legal requirements to the data collectors and to the obliged persons are the same, but then it's up to them to reach out to their clients, to the KYC on whom they are doing KYC, for how to satisfy these requirements. So in my biggest frustration that these requirements are not unified in terms of a format that you're providing. And but that's something to be addressed more globally, and not on this panel, but it's worth mentioning. And yeah. So this is my biggest frustration, that too much efforts for no added value. So this the formalism of the whole topic. So if there, but I think it's good to have a kind of a brainstorming, which at the end might bring some optimization routes to that.
I do think it's a common thread. So asking for similar things slightly differently, or asking for the same things once again, that's certainly a frustration I hear a lot.
Yes, and I have few more things to add to this list, but I'll give the word. I will give the floor to others.
Single biggest frustration.
Yes, that's the single biggest.
Yeah, I also experienced that very often the same information is requested multiple times, but in slightly different format. And it creates a lot of operational effort and work without necessarily improving the outcome. So I think, yes, this is the biggest frustration from corporate side. Yeah, and I'm also interested in discussion around standardization, smarter processes, and how can we make KYC more efficient for everyone involved, also for the third parties and for the banks.
Yeah, absolutely. I share the experiences from Natalie and Orsolya. The KYC burden in our department is also quite high, receiving KYC requests from banks again and again with the same questions in different format. And I have the feelings that banks are continuing to accept their standard, but do not adopt standards from corporates so far. And yeah, it would be a huge time-saving advantage if the KYC standards could be more standardized, and if we could find common sense with our relationship banks.
Yeah, and I agree with all that you have said. And we have also worked a lot with the internal process here at Volvo. We are like over almost 1,000 entities within Volvo Group. So of course, there are a lot of KYC requests popping up. But we are working to get a central repository and trying to minimize the work both internally but also with the banks, so that we have updated documentation that we can easily reuse, and that is, we are already seeing some efforts on those steps we have taken with our main bank, and that is good, but we need to work, of course, moving forward also. So yeah, it's lot to do.
And thank you. It sounds like a common bugbear, a common thread across. But I guess in context of how things have changed over the years, is it improving? Is there kind of a convergence on what banks are asking for? Or is it a compounding factor that more and more is being asked for in slightly nuanced ways? There isn't an explicit regulatory standard. There's guidelines that banks have to work to. So it's the application of those that they're executing against. How's it changed over the years from your perspective? Is there a convergence on requirements across banks, or are you just not seeing that?
I think earlier it was more like a periodic exercise, but now it's continuous process that runs parallel with our core treasury activities. And requests are coming more frequent, they are more detailed and increasingly inconsistent. Also within same bank group, you can get different templates, and then also across different banks and financial institutions we work with, there are different requirements on what they want to have for details on our data. But also, it's I think banks are now investing heavily also in digitalizing this KYC process, but I don't see necessarily it has become simpler or less resource intensive for us, at least yet. But of course, we are on this journey and now together with our main bank, and we hope really that this will make the process more efficient moving forward. And we have taken some steps already, so I'm happy for those steps, but there are still a lot to do, of course.
think it starts to touch on something I was going to come to later, which is about corporates perhaps taking control a little bit more. So we'll come back to that. But in context of, I guess, the direction of travel with regulation across your banking relationships, it sounds like it hasn't simplified, it's actually compounded in what's being asked for. And I just wonder if with AMLA coming and perhaps a new EU-led directive, so somewhat cross-border, do you anticipate AMLA being something that provides an opportunity for simplification, for harmonization, or are there other considerations for yourselves and your peer corporates with the banking relationships and KYC requirements?
I can go first, and you ladies come after. I think at Volvo, as we are operating through many European jurisdictions, we see AMLA as a very important and welcome development. And we hope it will come with European Union-wide harmonization that should reduce the fragmentation that we have been working with in different countries with different legislation and so forth. And also this single rule book that they will come with, that should over time reduce the differences between different European Union countries. So I hope really that this will be the case, but we are of course realistic, and we do not expect an immediate simplification of KYC requests from the banks, as banks will continue to apply their own internal policies and how they interpret the AML regulation in the beginning. But in summary, I see AMLA and the AML regulation that is coming, that it's necessary foundation for simplification. But we'll see. We need to work together with the banks and take that into practice and hopefully simplify the KYC processes moving forward.
What I would like to add, Soli, thank you for your experience, that from my experience, it's not only also the institutions who are now asking for KYC. The number of institutions is growing. So not only the banks, but because from the bank side, I can see the efforts how to get to the common, to find some common ground and not to over request or put too much burden on our side. But for example, I can experience more and more KYC requests from the law firms, auditors, notaries. So wherever you go, the first thing before they start providing services is KYC. And so this uncertainty about what to ask and how deep to go with the KYC, especially if they encounter clients with a bit more complicated structure, or something which is not so common in continental Europe comparing to the common law structures like trusts, like other arrangements, and that creates a lot of questions, a lot of uncertainty, and requires a lot of time for onboarding. But I understand we will discuss about onboarding processes later. But also the periodic review of the KYC is really jeopardizing business relations. So I would really welcome any efforts of the regulator to give some clarity and unification of the process.
Yeah, it's an interesting point. And when we did our introductions last week, we were talking around this topic. Something I hadn't considered, which was raised here, was actually we're not sure what AMLA means for us and the KYC we might have to start doing where we didn't have to do it previously. And you've just made reference there to another example, which is it's widening the scope of organizations that need to do some form of due diligence in this space. So while simplification might come to an extent, solely assuming the banks can harmonize what they need to ask for, there's potentially a lot more partners in your supply chain that might be asking information of you as well. So a bit of a left pocket, right pocket.
Exactly.
Yeah. Johanna or Solia, would you like to add anything on to that theme around regs and AMLA generally?
Yeah, I definitely see that the banks are trying to standardize the KYC processes more than before. So they are using digital onboarding tools and a structured questionnaire. But at the same time, the level of the detail, the request has increased. And I'm experiencing more often the data refreshes and periodic reviews that in the past. And in Friesland Campina, internally, we are also looking at how we can become more proactive and structured in the way that we manage the KYC information. So the most important area is centralizing the documentation and maintaining a single source of data. So we don't need to collect the same data every time for every occasion, for every periodic reviews continuously. And also another focus area is improving the collaboration and the communication internally in Friesland Campina. So we would like to reduce the waiting time for one answer from the legal team or the stakeholders or the opcos, because we have a lot of subsidiary companies here. And I think internally we can do a lot. We also tracking the workflow for the outstanding request, and we are also looking the expiry of the documents, IDs, so we can act in advance before the actual request is coming. But of course, it's very sometimes it's challenging and time consuming. Especially when we are onboarding a new entity, as you also mentioned, and we have a time pressure. But also in this situation, in this case, we try to collect every KYC requirement and documents in advance as much as possible. And we sometimes also struggling with the delay. But I think it's more common from corporate side.
I thought I was listening to a head of KYC operations at a bank there as you talked around the process and some of the process steps that you're taking and improving. It's all very similar sorts of activities, right? Trying to understand front-run requirements, gather information ahead of time before it's been asked for, tracking document expiries. So activities that appear to be taking place on both sides of that relationship equation. So again, I don't know if that's a balancing between bank and corporate customers, or whether it's just an increasing demand on yourselves to be proactive. But thank you. Johanna, anything?
Yeah, we also see that on the one side, banks are trying to streamline their standardized KYC processes. For example, they're not resending their questionnaire on a yearly basis, but keep on asking us if the data we provided a year ago is up to date, and we just have to send out a confirmation instead of filling in the questionnaire again. But our feeling is that KYC is not just a regularly obligation on bank sides. It's more coming to a component of their risk management. And we experience that they look really deep in the structure of our company. We are a listed stock company, and we have to be very transparent due to legal requirements, but still sanctions is a very big topic when it comes to KYC with banks. We're acting globally, and banks want to know in which countries we are active. Our shareholder structure is always a huge topic. Banks want to know who is standing behind our shareholders, which person. Yeah, those are topics we're dealing with over and over again. Yeah.
And I guess in a lot of circumstances, the nature of the information they need to attest or ask for is information that just hasn't been able to be sourced publicly. So there's always some form of reliance on an authorized representative of the corporate verifying that that's either still true and accurate or what the latest information is. So there's a required communication channel there for those sorts of scenarios, isn't it?
Yeah.
And I guess given that other concerns around in the kind of digital world we live in with the security element of how that information is transferred, I go back to my KYC onboarding days. We still had filing cabinets with wetting chops and signatures on constitutional docs, and there's been an evolution for sure, but it's perhaps not fully digitized everywhere for some of this information, is it? Still reliant on email, for example. Does that raise compliance?
Yeah. I think both. I mean, we could standardize with the help of Encompass and the normal KYC processes, for example, documents like IDs, which are requested on a regular basis. They will be sent. We send them out via the platform because, this is very standardized information the banks want to see or want to have, but when it comes to questions like shareholder structure, sanctions, AML, these questions are normally not standardized, and then we communicate with the banks via email, which is, of course, time-consuming.
Yes.
We also try to reduce the email communication as much as possible and avoid to send sensitive information as an attachment via email. So we also use the tool to share this sensitive information and documents in a secured way. We also prefer to communicate via this tool instead of the email. Of course, in not every occasion it is possible, but we try to use the tool as much as possible, as we also can store documents in a secured way. So it's also a lot of benefit for us.
And that's wonderful to hear. I haven't really come to the tool yet. So the tool you're referencing is EC CoorpID, which is where you're now uploading, storing securely, able to permission and share out through that corporate vault the relevant information to the relevant parties. So I'd love that we get into that as we go through this a little bit further and talk about what were some of the reasons for choosing EC CoorpID as a partner to manage your corporate digital identity. But thank you for that. I was going to talk a little bit, and it was wonderful to hear some of the recognition around banks are investing, they are trying to drive change, they are investing in people, in platform, in process re-engineering. Doesn't sound like it's had quite the desired results, maybe from their perspective, but maybe not from yours either. But what have you seen, and what do you see could be done further than just standardization of requirements, because that in itself is quite different with how the regulators give feedback and how internal policies. What are some of the other things that you think would really have most impact on how you interact on your relationships with banks?
My personal thinking is that we should look into AI, of course, with a lot of reservations about privacy, confidentiality. But I see that I can see the potential that if you use the AI agent who will be collecting the information on the ring fence closed basis, that only this AI is operated only within this particular database and not going outside of your corporate domain. And then this AI will help you fill in all these KYC questionnaires, different forms, of course, subject to your final review and approval. This will reduce technical work, just copy-paste work a lot, or we'll come back with a list of needed information which is missing, or for example, as Ursolia mentioned, or for example, checking the IDs and checking all the documents, whether they have expired or not, and then warning like a few months up front that this should be checked, and then even preparing the standard emails, reaching out to different people. So all this job that requires a lot of following up and controlling and filling in the forms. Here in Dellen, we have not yet introduced such an agent, although we are now testing the Claude for Business. But I have not yet discussed this with our office on how to use it for KYC purposes, but it's still in my list to topics to discuss.
Yeah, I think AI is a very good opportunity, but at the same time also a risk, because I'm interested in using AI to reduce the manual work, as Natalia mentioned, but also I have concerns sometimes about the data privacy. So I think the focus right now is on using AI in a controlled way and with a strong human oversight.
No, but that's what I mean, that it should be an AI agent which is specifically designed for, it's like a program on your computer, which is not connected to the like ChatGPT or whatever. Yes. Online. So it should be specifically designed for your specific needs. But that, of course, requires collaboration with the IT team. And but I think that's going to be a great easement for this kind of work.
Yeah, there certainly is a lot of opportunity with which AI presents itself for, and a lot of applications that could be applied to. And I think a lot of us, myself included, have been thinking of the application that banks could put to AI to support how they consume information that is shared with them. It's been really interesting to hear how you're looking at potentially as a use case to automate the response to what is dynamically different, similar, slightly different from relationship to relationship. So it's an interesting space, but I think everyone agrees it's one to, given some of the privacy questions, proceed with caution. Test, was it measure twice, cut once, test. Wonderful. Okay, so some great stuff in there, and like I say, it's great to hear that what we hear and what we see, which is a lot of thought, time, investment being made to try and improve the process, both from within a bank for a bank, but also with that view of client experience in mind. It is actually is recognized and having some impact. I'm just going to pivot quickly to some of the results that came out of the Global Corporate Treasury Survey. And I think we've all walked through at some point individually. And again, for those who haven't yet seen it, we'll share the QR code at the end of the webinar. Please do download and take a read. The responses paint a slightly different picture to what we've just discussed there, and it is quite bleak, and I mean, some of the headlines are quite concerning. So of all the global corporate treasurers that were participating in the survey, even more than ever have said they're spending more time away from their core roles and responsibilities for the organization in order to manage KYC. And that was up to 97% of all respondents saying that they're getting distracted from the core of why they were hired because of delays and friction in the KYC process. It's now up to 96% that say they've abandoned an application due to KYC friction or delays, which again, it's an alarming number. I know we've discussed previously, do you select a bank for a particular KYC process or not? And there's still a very much relationship-driven aspect to some of your accounts, but there are people abandoning applications because of frictions in the KYC process. And even more have said that they're considering to switch banks. So even if that hasn't happened yet, it's creating such a tension, it's eroding that relationship value to a point where there is a consideration to move. Do these numbers, these sentiments, these things, do they make sense to you? Is it a surprise what we've seen in some of the corporate treasury results, even if it's not, directly something that you've experienced? So Eli, I can see you kind of nodding away.
Yes, at least I can say from our part that if there are delays in this KYC process, it will of course directly impact the ability to open accounts or execute our transactions or support new business that we are starting somewhere. So of course it will have a cost somehow, and it's important that we get this process as fast as possible and not taking away the time from other value-adding activities only for this administrative follow-up, as I call it. But I know it's important step for banks, and we need to work together with them to get this moving. Of course, we are using a lot of time in this today, and yeah, hopefully it will get better and better.
From our
Sorry, yeah, we also experience that KYC can become very crucial, especially in regards to setting up new financings with banks we didn't have a relationship with before. I remember we had cases in which KYC was the last outstanding point in the contract negotiations. And that it's sometimes really, really time consuming and can delay the process in getting a financing done.
In our experience, we didn't have cases when we walked away from the bank because of KYC, because we understand that this is the standard procedure you have to run through with any financial institution you are dealing with. However, I would say that this KYC became one of the factors that you're considering before you would like to switch the bank or to move to another bank, because then you say like, here we already have, they know the company, they are doing their regular KYC. It's much easier. Now, if you're gonna switch, they're gonna run through the very extensive KYC and AML process, and maybe like, oh no, we don't have time for that, because, for example, you need to organize something like in 2 months, and then it's impossible to have all the contract negotiations and refinancing and negotiations and KYC in one time. Also, for example, if you're opening a new bank account, you would go to your financing bank because they know you and they quickly run through KYC. So that's KYC is kind of a not trap, but like very considerable topic to when you're thinking about changing about refinancing. But as I mentioned, not only the banks are the obliged persons to do KYC. We had a case that we were choosing different administrators and transfer agents for some of our companies. And so we were running kind of tender. And during this tender, we realized that one company is running their KYC in a very non-friendly manner. They have as many institutions have their separate KYC department, and that was very cold and not efficient handling of KYC. And in the other case, it was much more not about friendly. It's about willingness to find a solution together. For example, they have requirements on specific certification, and we were not able to provide that because we have different jurisdictions, and then we suggested some alternatives, and this was accepted in one case and not accepted in another case. And then we chose the candidate with even slighter expensive, but because they're running the administration process smoothly, and we were like, okay, if they are doing KYC in much more efficient way, probably they're also doing administration and what we are hiring them for also in more efficient way. So you can see this KYC was a decisive thing to choose a candidate as a service provider.
You're actually doing due diligence on potential suitors' due diligence processes to decide where you might establish a relationship. But I guess there was a financial impact to you there as well, and you said it was more expensive, but
exactly
it was going to be easier. So it's actually become a cost of business.
In some other cases, for example, we had once we were almost at risk of losing a lot of money because we had to distribute to make some financial distributions, and just 2 weeks beforehand, the transfer agent was like, by the way, I have to do my periodic KYC review, and I'm blocking all your accounts, and all the investors were not able to get their dividends because the transfer agent didn't inform us upfront that he's going to do this periodic review. And it was a big panic, and a lot of we were trying to mitigate so you're trying to mitigate risk, you're trying to do everything as planned, and then all of a sudden this KYC review can pop up, although we were not informed that they have to do this like every 3 years. So yeah, sometimes they didn't lose money, but it was all very close.
Yeah, and I also think we are under a time pressure when we need to open a new bank account or onboarding a new entity. And if we have delayed it, of course, it will be cost efficiently, and also it can be slow. And it affects also for the daily operation, and also when we have a local requirement, so it's not in European Union, it will be more slow process. Yes. And it can be very frustrating at the end.
I agree. Yeah, not even going in that direction, talking about international KYC, it's the Pandora box.
So that's wonderful. I'm looking at the time conscious. I want to make sure the audience get to participate as well. So maybe we'll start to look at the poll. And just before we put the poll up, I want to start thinking about some of the themes that have come across there from yourselves around how we embrace technology as it provides opportunity to improve, keep efficiency, to digitize, create security. But what are some of the things that we feel would have the single biggest impact? We're going to talk about it after the poll question, but you're each users of EC CoorpID, which is giving you a digital platform for that single secure storage of information with permissioning elements. But as general themes, I'd be keen to get a sense from the audience from the poll question, which should be on the screen now. So if you could have a quick look through, which single improvement would make the biggest difference to your KYC experience? So feel free to select one of those on screen and hit submit, and we should be able to get a pulse across the 100 or so people online. Well, this is staying a little more consistent than some other ones I've seen. So definitely sharing and consistent with some of the frustrations you mentioned at the top of the call, ladies, with it being duplicative requests that are coming across. So similar but slightly different information, or the same information being asked again, it not being reused. And the secure vault sits up there a bit higher than maybe I thought. I mean, I definitely see the value in the secure vault, but yeah, I didn't think that would be at the as at the forefront as it is for a lot of treasurers here. So going to show that security is becoming an ever increasingly important aspect of how you think about your information and share information as well. Okay, I think Terry's just put something about if you're dialing in from a mobile device, how to submit the poll. So thank you, Terry. Right, so I wanted to come on and talk a little bit around corporate digital identity, which I think in essence is what we've been talking around today. So if we link in some of the themes, it's about creating that record of truth around who the corporate is, and how people then consume that information, whether it's same or slightly different in different scenarios. It is in essence a finite list of pieces of data or information. How people consume and interpret it is in accordance with our own risk policies. But corporate digital identity is the complete standardized set of verifiable data and documents that is required to identify, understand, and trust who the corporate entity is. The digitization of this identity is a fundamental shift in how corporates manage and share their information with banks and their partners. As individuals, we've already experienced the shift to digital identity. Today, an ever-increasing number of banking, government, and other services are available where one's identity can be verified without the need of a physical presence in a branch or certified true copies elsewhere. It is a little bit more straightforward for an individual. The bulk of the relevant data points never change. I am who I am, my date of birth won't change, etc. The digital transformation journey has been more a question of the trusted sources to verify that the information can be trusted. It is slightly nuanced for corporates, and as we've been discussing earlier, there might be slightly different data points that are required or relevant for different scenarios, but data points can also be a little bit fluid for a corporate, such as, I think, Natalia, you mentioned earlier, the shareholder, or was it Johanna? The shareholder behind might change in a listed company from time to time. Directors may well move on, so there could be a new director, a change of directors, signatories might come and go, and so on and so forth. So it is slightly more nuanced for corporates than it is for individuals, and perhaps why transformation to corporate digital identities playing a little bit of catch up compared to individual ID&B. I think as a first, the industry has been resolving to understand requirements and trusted, suitable sources of truth for the informations around corporates to move to corporate digital identity. And that's been a prerequisite then to the actual adoption of a corporate digital identity. I think ultimately where we've got to naturally, organically maybe led by some of the corporates on the panel today as well, is that it's a blend of information that can be obtained from credible public sources, combined with details that have been verified by an authoritative individual at the corporate. And that's what, as a blended view, starts to actually manifest then as corporate digital identity. So in Encompass Corporation, we launched our CDI platform, award-winning CDI platform, in February of last year, EC 360. And we are now through EC CoorpID as one of the solutions within the platform, helping you and your peers, corporate treasurers and supporting functions, take control of KYC and own the corporate digital identity for the first time. EC CoorpID is giving comfort and control to people over their information and where it's being shared. It's reducing friction and removing duplication between banks and their clients, and it is supporting a wider transformation and modernization of the Treasury agenda. That's just my opinion, but what I'd love to do is spend a few minutes, Natalia, Soili, Wasolia, Johanna, you all embraced and adopted EC CoorpID. I'd love for you to share some of the early day thoughts that went into whether you will, you won't, you should, you shouldn't, what were some of the questions, as well as then what's been some of the experiences and the benefits that you've taken from it. Natalia, should we start with yourself?
Yes, sure. So when I started using CoorpID, I think 3 years ago, something like this, and it was, of course, it took time to get comfortable with working. But once you are getting used, it's becoming a really nice tool to share the information and to have everything stored in one place, per company. And also at the beginning there was some not problems, but some difficulties in sharing the Q&A information. But now it's much easier. And what I like that once I share my replies on questions, the bank sees it immediately. So the bank got the notification. So it's somehow helping in the communication process with the bank as well. So not only secured, and not only it's handy to have everything online in one place, and then you can share this with other KYC agents as well, but also communication-wise.
Yeah. Thank you. Maybe to add on those points, we started to use CoorpID or Encompass 10 years ago, back at a time when we took over another liner shipping company located in the Middle East. And with that, we inherited quite a lot of financings with banks we didn't have a relationship with before. And the process was, quite complex. And we were looking for a tool to structure this KYC processes we had with those banks. And the tool helped us a lot to store the documents the banks are asking for at one place. And we handled it that way that our legal department is feeding the system with the information we requesting, and they're keeping the documents up to date and upload any changes. So this saves us time in asking them, is this the latest document we're using? We have just the latest document or the latest information available on the platform, and we can easily share it with the banks without sending secured emails which are locked with a password, because if you send out IDs, it's sensitive data and sensitive information, and we want to make sure that this information is only be received by those persons who are requesting it.
Yeah, in our organization, I use EC CoorpID to store data and also share data in a secure way, as you also mentioned. But it's also a very good one that I can check the previous requirements and the answers in the past for the historical data. It's also a big benefit for us. And I also can track the status of the ongoing request. So I'm fully control in my requests at the time.
And I think I will come with the same answers. And from us, from our point of view, we had scattered KYC information in different email boxes depending on who was handling the request. So that was one thing that I wanted to change to make a more efficient process, and knowing what is the status on each KYC request and who is handling that, and that we can get today, and we have an audit trail ready if needed, and we can reuse the data in KYC requests depending on which bank is asking what. So those are great benefits for our processes at Volvo.
That's absolutely wonderful. Thank you for sharing. So yes, as part of the EC 360 ecosystem, EC CoorpID is placing control of KYC in the hands of corporates for the first time. It is a digital vault to manage corporate structures, upload data, documents, and securely store and permission out to your banks, and indeed other partner relationships that you may have or may have to start sharing information with once SAMLA comes, Natalia, as you mentioned earlier on. So removing reliance on email communications and managing through the platform is putting greater levels of control and comfort around enhanced security measures across that information. And I do honestly believe it's somewhat unique as a KYC solution that's developed firmly with the customer's actual experience incorporated into the design process. I'm going to, just before we start to wrap up, recognise there has been a question that's been posed, so thank you, I think, Richard. Can corporate digital identity be configured to account for international, regional and the local requirements of multiple jurisdictions and across multiple regulators? Yeah, so I think the point of differentiation from our perspective is corporate digital identity is all of the relevant information associated to the corporate entity. How you consume, what you consume for that, and its relevance to your requirements in those jurisdictions might differ. But things like a registered address, the directors, the shareholders, the signatories, all of the key core KYC and other CDD requirements are the same wherever you go. What you need to extract from that corporate digital identity and apply to a unique or specific set of rules or regulations in a country will differ from time to time. The CDI shouldn't need to change to account for your booking models or the booking models or local requirements necessarily. But if you'd like to talk more on that, if I haven't quite got the essence of the question, feel free to reach out after the webinar. I probably enjoy talking about this a little bit too much, so we'd be happy to have a virtual coffee chat and go through that at any point. So conscious of time, everyone I'm sure has got plenty that they want and need to be getting onto. So that's about it for this session. I'd like to thank you all for your attendance and shared interest in the topic. The session was recorded and we will be sharing a link to it. As I mentioned earlier, for anyone who hasn't seen the latest corporate treasury report, the QR code is on the screen now to download it. A huge thank you to our esteemed panel for taking the time today and talking so openly about the challenges that so many people on this call will be facing on a daily basis, but also sharing candidly a little bit how you're looking to take back control yourself. For anyone interested to hear more about Encompass Corporation, our CDI platform, or more specifically how EC CoorpID is supporting corporates secure and digitize their KYC interactions, this handsome chap is Robert, and he's our lead for EC CoorpID. And if you reach out to him directly, you will get a warm reception for some introductions and a demo. Once again, I've been David Williams. It's been my pleasure. I'd like to thank my panelists one last time, Georgia and the team for supporting webinar setup and execution as well. Thank you very much.
Thank you
very much.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Bye.
Bye.